Hey guys, welcome back to another episode of the Property Source and Success Show. Slightly different spot for me today recording the podcast. We've been in and out of investor meetings all morning. I'm currently sitting in the bar area of the Grand Central Hotel in Belfast. Today's topic is actually inspired by a conversation I had with somebody recently. And here's the reality. Look, most property investors hit a wall. They maybe manage to scrape together one or two investments using their own savings or equity, and then suddenly, bang, the money's gone. And they're stuck and they're left thinking the only way forward is maybe to find an investor, do a big refurb, flip it really quick, back to brick, then pay the investor back fast. Now, that's the story most of the education realms will sell you. And, really what I want to do today is I want to call bullshit on that, because there is another way. There's a smarter way. The way that I've been scaling my own portfolio for the last 8 years now. And it's a way that allows you to build with far less stress, with far less risk, and ultimately with far more stability. So what I really want to chat to you guys about today, I want to go over a few things, a few key areas. I want to have a look at why most investors hit a plateau in terms of funding faster than they expect. I want to have a look at the biggest myth about working with investors that's ultimately keeping you playing small. It's keeping your portfolio small. It's keeping your scale small. I want to have a look at how I shifted from chasing really refurb heavy deals, which is definitely what I fell into that trap when I started my investment journey, almost 8 years ago. I fell into the trap that everything had to be back brick. It needs to be a big refurb. It needs to be a big rip out. It needs to be, from the ground up. And I shifted that and started working with a new calibre of investor. And then I want to have a talk with, why focusing on long-term and finance and the right areas is actually the key to really sustainable growth. So if you've been feeling stuck, this one is definitely for you. Here's the reality. Number one, there is a problem of the plateau. Most people start with their own money. Maybe it's savings, maybe it's equity from their own home. They buy a couple of properties, but after that, you're actually tapped out. Now, this is the moment where most people stall because they've been told this is the only way to keep going is to do buy, refurbish, refinance, find a heavy refurb, bring the investor on board, get their money back out in 6 months, rinse, repeat, rinse, repeat, rinse, repeat. And for some time, it works for a while, don't get me wrong. But for most, look, speaking from my own experience, it's really exhausting. It can be pretty risky, and it's just not sustainable in today's market. It is not sustainable in today's market. Then you've got the myth of it's the refurb or nothing deal, right? Let's be real. Let's get candid here. In the early days, that was me too. I'm just, I've been fully transparent with you guys in the podcast. And that's what I try to do every time that I jump on and I record a session. I try to give you the boots on the ground, the experience as I lived it, as I felt it, as I walked it. And that was me in the early days doing the big refurb projects, the properties that you go in, that you refurb, you add loads of value and you refinance and get out, and then you do the next one. But over time, those deals got harder and harder to find. The margins on them tightened. The competition exploded. And I realized not actually every investor wants their money back in 6 to 12 months. There's just an assumption that the industry sells to beginners. There's an assumption that the industry sells to novice investors. There's an assumption that it has to be all money out in 6 months or it's nothing. Well, that's so I had to make a shift. And instead of chasing quick wins, which admittedly I absolutely did, I started working with a different caliber of investor, people who didn't want their money bouncing in and out of pretty risky projects on the face of it. Now, these investors lock their funds in with me for 2, 3, sometimes 5 years. I have investors that I have been rolling finance on with for 5 years. And I'm calling a spade here, guys. That changes everything. It gives me the space to buy in really quality areas. So I buy in areas of South Belfast that would be particularly, I use the word affluent, but their capital appreciation is strong. The areas are close to affluent residential areas. The capital growth is strong, and it allows me to comfortably refinance over time and pay them back. So it's not about finding unicorn deals anymore. It's about discipline more than anything else. Buying in the right areas, holding through the mortgage term, letting time and growth actually do the heavy lifting. And why does it work better? Well, look, honestly, this works better for everyone, right? It works better for the investor because they get consistency, they get security, and they get a relationship that is built on trust. For me, what do I get? Well, I'm not chasing risky projects anymore just to try and turn quick buck around quickly. It's not the way this game works anymore. It worked like that 10 and 15 years ago. It works like that if you do a 3-day crash course now. That's still what they're telling you to do. And for my portfolio, it scales steadily, it scales safely, and it's built to last, which is why I am really rigid on where I buy. I don't need to force value into a deal with blood and sweat and tears. I know the growth will take care of the repayment steadily, 3, 4, 5% capital growth year on year. That's fucking smart play, guys. So in terms of pulling it together, if you are stuck at a plateau, if you've got, a small portfolio, but you've hit a bit of a ceiling and you want to push on, you want to grow the portfolio, and you're scratching your head and wondering, how is everybody else managing to do it? It's not really because you've run out of money. It's because you've actually run out of imagination. And that sounds pretty harsh. It's also maybe because your mindset's not letting you look further to see what's possible. I can tell you this now categorically, if you cling to the belief that the only way forward is to chase heavy refurb projects, then you will keep hitting walls. And the people who are consistently doing this, doing the big refurb projects, it's because they don't know how to find the quality investors that will allow them to scale their portfolio in a much less risky, much less exhausting, much less stress-free manner. But if you shift your thinking and your investors, I can tell you now, coming straight from the horse's mouth, you unlock a completely different path. So my challenge to you is this: stop asking when's the next big refurb coming through, and ask yourself better questions. If you ask better questions, you'll get better answers. Who do I know that I can build a longer term partnership with? Who trusts me enough to leave their money with me for 2 to 5 years? And in which areas can I commit to, knowing that the growth will take care of the rest? That's important. And that's how you get unstuck, guys. That's how you scale. That's how you build a portfolio that lasts. So look, if this has got you thinking differently about raising investor finance, good. It was supposed to. That was the point of today's podcast. And that's why, even though I'm sitting in the bar of a restaurant in Belfast city centre, now I am not having any alcohol, I'm having green tea, but that's why I wanted to get this podcast episode out today, because I feel really strongly about that. Now, this is the exact strategy I teach the guys inside my 6-figure coaching program, and it's how I've helped investors like you listening, tuning in, break through that plateau and actually scale. So if you want to dive deeper onto this topic, just connect with me. Like, the best place to start is maybe dropping me a direct message on Facebook, Danielle Bell, or Instagram, I am Danielle Bell Property. Shoot me a direct message there. I'm happy to have a conversation with you about it. And don't forget, I send daily email blogs each and every day directly into your inbox, going really deep on investor finance, scaling, sourcing properties off market, working with high level investors, you name it. So if you're not getting the daily email blogs, check your spam folder. Mark me as your contacts. And that's it for today, guys. Thank you for tuning in, and I will categorically catch you on the next one.